Whether you're dreaming of a retirement with sand between your toes and a cold one in your hand, hitting the road to chase the winds of adventure, or spending time with your grandchildren, this show is intended to help you get there. Welcome to Coasting in Retirement with your host, Josh Knoll. You've worked too hard throughout your career to spend your retirement worrying. So sit back and kick up your feet because we've got lots of financial tips and tricks to share to help you get exactly where you want to be. Here's Josh.
Hello, Lower Alabama. Hello, Gulf Coast. Welcome to Coasting in Retirement. That's right. Thanks for joining us today. Josh Knoll here. Guess who's back in studio with me? The one and only Michelle Lee Melton.
I am back.
Yes, it's been a long time.
It's been a minute.
You've been a little busy.
I've been very busy.
Yes. Well, we are back. Michelle and I are back in Coastal College's recording studio, beautiful downtown Fairhope, ready to put together another great show for those of you tuning in. Listeners, Michelle and I are here today to discuss financial topics relevant to those of you in or near retirement, living your best life along our part of the Gulf Coast. Here's what we got in store for you today. First segment, deep dive on our topic of the day. Second segment, roughly 30 minutes past the hour. We got Michelle with the headlines of the week. And then roughly 50 minutes past the hour, stick around for our third segment. We call it Josh's Crystal Ball and Big Mouth. Buckle up, we've got a lot to get to. Quick background on me for those of you new to the show. Again, my name is Josh Knoll. I am a fee-based financial advisor. I hold my FINRA Series 65 securities license, and I'm the owner of Gulf Coast Financial Advisors. That is a 100% locally owned, 100% independent investment management and financial planning firm. We have offices in Fairhope, Orange Beach, and Mobile. You can find more information on me and the team at Gulf Coast Financial Advisors by visiting our website, gulfcoastfa.com, or feel free to give us a call anytime, 251-327-2124. Now, if you just missed that contact info, get a pen and pad ready. We'll repeat it several times throughout the show. All right, so Michelle.
Yes.
When you're not watching Below Decks.
Ooh, I love the Below Decks. I like the scenery, and I like imagining being on a yacht.
What do you call that kind of TV?
Trash TV.
Yeah, that's your favorite.
Yeah.
All right. Well, when you're not watching Below Decks, do you like crime investigation shows?
You know, I like documentaries about kind of lightweight criminals. Like the apple cider vinegar girl.
Yeah, where it's almost like a silly twist to it.
Well, no, it's just like you wouldn't think they'd be so heinous, but they really are.
All right.
Like Bernie Madoff, he was a pretty bad guy. You know, it's like you just think it was all money, but he was a jerk.
And, we're going to be talking more about that today.
I know, and I've got notes about it because I have seen said documentary.
Well, so let me ask you, speaking of...
And apple cider vinegar.
So when you said Bernie Madoff, an investigative show, when you first met me and I told you as a financial advisor, did you have any flashback? Okay, you did.
Because I feel like even knowing the difference between a day trader and a stockbroker and a financial advisor in theory, I felt like the bad guys call themselves financial advisors to cover up.
Isn't that amazing?
Being a day trader.
Now, this was when you first met me. This has been a minute.
Yeah, it's definitely Wall Street vibes.
Okay, all right. Did I have Wall Street vibes? I did not have Wall Street vibes.
No. Do you remember what you were wearing? Because there was one piece that you had to get rid of or I would never go out with you again.
My famous necklace.
Yes.
All right. Well, and that's fair, what you just said, and you're certainly not alone. And I would like to think over the course of obviously being with me, but particularly being on this radio show, you've learned the difference.
Yes.
Right? Unfortunately, you're right, though. My business has had its fair share of bad actors. And, whether there's those of us who are trying to do the right thing or not, and whether we like it or not, these bad actors reflect poorly on all of us, right?
Correct.
Otherwise, you wouldn't have that thought pop to your mind.
Yeah, I went to law school and graduated, so,
Yeah, so you're suspicious of everybody.
Right.
All right.
Well, I mean, lawyers get a bad rap.
Well, so on that note, I believe you are aware. It's this.
I'm aware, but I don't know any of the names, and I tried to read the article in
hold on,
our
let me
source.
get to it. So listeners, there's a fairly recent news stories concerning a fraud and a financial advisor located in Point Clear.
But the business was in Florida. Is in Florida, right?
Well, I think he did both.
Okay.
So for listeners not familiar with their area, Point Clear is what, Michelle, about 10 to 15 minutes south of downtown Fairhope?
Yes, and where we want to live.
Yeah, it's on the bay, right? Possibly where we want to live. So basically, listeners, a local man was sued by over 30 Baldwin County residents for allegedly stealing tens of millions of dollars. I've heard through the grapevine the number is $50 million.
Okay.
Through a quote-unquote hedge fund that he managed. Now, y'all are noticing I'm not saying his name. I want to tread carefully because this lawsuit is ongoing, and to be fair, People are innocent until proven guilty, although I can tell you the details about the case don't look too good.
Well, you say the same thing about P. Diddy, too.
Fair.
Acquitted for most of them. So.
Right. So we're going to be fair and not get ourselves in trouble. We're not going to mention it. But if you're curious, listeners, it's pretty simple. Just you can Google Point Clear, Alabama financial advisor fraud lawsuit or anything around like that, and you're going to find out what I'm talking about. And
not on a Lanyap, you're not, because you got to pay for that.
Yeah, for those of you all that have a subscription to Lanyap, you probably already know what we're talking about, because they're the ones that, I think they're the ones that broke the story.
Yeah, cracked it open.
Right. Now Lanyap is local news, and the story, at least not yet, hasn't made regional news. My guess is as the court case unfolds, it probably will, because the number is big enough.
Well, it's interstate commerce too. That's a big bad. That's bad news bears.
And for the record, while I certainly recognize some of the names in the lawsuit, because like with anything, this stuff is public, and the lawsuit is publicly. It's on a couple different lawsuit sites. And I feel terrible for him because I recognize some of those names. I've actually never heard of this guy before, this advisor.
Which is strange.
Which I can tell you, listeners, after 11 plus years of being fully immersed in our local community, both professionally and personally, that's a huge red flag. Because at this point, I know most, if not all, of the independent players in the financial services in our area, yet I had never heard of this guy. Anyway, we wanted to use this. We thought this would be a good case study. So the title of today's episode is called How to Avoid Financial Advisor Fraud. And I should probably expand that to include investment managers and hedge fund managers. And Michelle mentioned stockbrokers and what was day traders, which I'll be honest with you, there's not a whole lot of stockbrokers left. To be honest. I mean, that's kind of an old school thing. I'm sure there's still some out there, but the days of
I'm sure there are still some out there in New York City.
Maybe. But the days of Wall Street where they're sitting around cold calling everybody, I haven't seen that in a long time. Basically anyone that manages other people's money. So in this episode, we're going to detail some of the boxes you want to check with anyone that you wish to invest with, and we're going to discuss the red flags to look for. Some of those red flags are obvious, some are not so obvious, unless you know my business well. So we're going to dive into that. The first detail, let's do this, Michelle. So let's detail the way that advisors steal client money. Okay? We're going to go through a couple different scenarios. First, it's called direct theft, but it's better known as a Ponzi scheme.
Oh.
And that's what this Point Clear guy is accused of, right?
Okay.
A Ponzi scheme.
I'm familiar with those.
Yeah, it's pretty simple. You take, in an advisor's case, you take client money and use it for personal gain or to pay off earlier investors. Usually there's some kind of fraudulent promised interest rate. Those of you all that pay attention to our industry are ding-ding-dinging with Bernie Madoff, because this is exactly what he did. Number two is forgery, and back to Ponzi. The Ponzi schemes are the ones that make the biggest headlines.
Yeah.
Because honestly, they're usually the ones that have the biggest numbers attached
Correct.
to them, right?
Yes.
Number two is forgery and unauthorized transfers. What that means is an advisor forges client signatures on withdrawal forms or redirect funds to accounts that they control. Okay? Ooh. Yeah, none of these are good, but there's another one. Number three, and this is one of the ones that's probably a little harder to notice or to even investigate, but the gentle term is called excessive trading. The legal term is called churning. The churning is less common with fee-based advisors, because as we've discussed, regular listeners will know, I could sit there in your account and make 1,000 trades in one day, and I don't get paid any extra money.
Yeah.
There's zero financial incentive because we don't charge for transactions or any of that. We're not commission-based. So it's less common in fee-based advisors, but it's where a commission-based broker, stockbroker kind of thing like Michelle is listed, might trade excessively just to generate commissions, which eats into client assets. And a lot of times they'll do like certain wash sales and things like that. And then number four on this list, and this one, you would think this would be hard to get away with, but this is kind of what this other guy, allegedly, this Point Clear guy did, but they're selling fictitious investments. They're creating fake investment opportunities or quote unquote private placements that don't actually exist.
Okay, so nobody, when you're in your line of work with this one, are they faking a website for these things?
Yes.
Okay, so they're doing the whole thing.
We're going to dive into all this.
Premeditated, full-blown criminal activity.
And again, allegedly, this guy actually, it was either him or a related story where they fake created the attorney site that was supposed to be overlooking.
That was another one.
That was another one. Okay.
Yes.
So yeah, there's all kinds of shenanigans, and we're going to talk. Listen, we're going to dive into the shenanigans, and then we're going to give you tips on how to avoid, because this is all terrible stuff, right?
Right. I also want to interject. I think another red flag is if anything that you're getting looks like it was printed off of DOS circa 1989, like Bernie Madoff's were, according to that documentary,
correct.
then you should be dubious.
Well, one of the things we're going to talk about is the importance of where the statements come from. That's
Exactly.
great setup for later. And especially you listeners that are listening, that you've worked your butt off for years to build a nest egg. One of your worst nightmares is picking a scam artist and waking up one day with all your money stolen. I mean, that's a terrible thing. It's a legitimate fear. And unfortunately, for our part of the Gulf Coast, what allegedly happened to the Point Clear investors is not the first time fraud has hit this area. Again, I'm kind of skip around names a little bit, but there was a loan brokerage guy in Robertsdale. He promised investors millions of dollars in return for large upfront investments. He stole almost every last penny. Then there's some of you all that had firsthand experience with a guy in Mobile. This guy, I want to say his name so bad, Michelle, because he was convicted. You know what I mean?
He's serving time.
There's no more alleged to it. But,
Right, yeah, he's serving time.
He didn't steal clients' money outright. What he did was convince clients to buy horrible, unsuitable, illiquid investment products that paid him high commissions and left them with millions of dollars in losses. I don't know if I ever told you a story, Michelle.
I don't think so.
Oh, man. So I was new down here. I was new to this side of the industry. I just happened to sit in on a client meeting as a fellow financial advisor, a friend of mine, still a friend of mine to this day. He was basically trying to help me, mentor me. He was training me. We met with a couple in their 60s. The guy had sold, I'm going to be generic here because in case they are listening, but the guy had sold his we'll say his plumbing company for a good chunk of money, and they had retired. I want to say they were around 62, 63 when they retired. Fast forward, they're now 66 or 67. They had vested $1 million with this guy in Mobile, and their portfolio had lost $750,000, and they were having to go back to work. And the work that they were having to do was so dramatically different than the work that they had left, right? And I bet some of you listeners know who I'm talking about. Anyway, at this meeting, I got so upset that my financial advisor trainer buddy had to tell me to chill out, because this was my first time learning about this joker, which, as the years went on, I heard more and more stories. It was always terrible. But apparently this was old news to him. So it's pretty gross, isn't it?
It's gross.
Right. So
Jerk.
now I would love to tell you all that there's some type of, I can't say a word.
Impenetrable.
The force field to protect you all against all this nonsense. But unfortunately, there isn't. We're not even talking about the shenanigans that commission-based, IMO-backed annuity shops pull on investors. That's small. What do you call it? That's small fries, small cheese,
Small potatoes.
small potatoes that pull on investors.
Tiddlywinks.
At least with most of those guys that that cram 80%, 75, 80% of their clients' money into illiquid products. At least with those guys, and they're mostly guys, to be fair. At least there's often a good or a well-known insurance company backing the product to sell.
With them, right?
Now, the level of fraud we're talking about today and that we just discussed is much, much worse.
Right.
But
they were faking whole businesses, right? Yeah.
But there's a couple of key things that investors can do to protect themselves. And for those of y'all that are leaning in and listening, this is the time where I want you to grab your pen again, and I want you to jot some of this stuff down because it's very important. First, if you are looking to invest with somebody and they are holding themselves out as an investment manager or financial advisor or a hedge fund manager or a stockbroker or anything that has anywhere where they're saying we manage other people's money, you need to know if the person you're talking to even has a securities license. I don't have time to list all the applicable securities licenses. Just remember that most of them start with a 6. There's 6, 63, 65, 66.
Why 6? Is that affiliated with some kind of code somewhere?
I have no idea.
NAICS code or something?
Couldn't tell you. There's even a Series 7, which is kind of the old school stockbroker securities license.
They're dying out, you said.
Well, it's just kind of become an antiquated way of doing business. I have my Series 65 license, which means I can do fee for service. Yeah, I'm so important, right? It doesn't mean that I'm perfect or anything like that, but it's an important first step. You can and should be able to find this information on the financial advisor's website. There should be a hyperlink to what's called an ADV. That's A as in Andrew, D as in David, V as in Victor. ADV disclosure. Usually we put them at the bottom of our page. Mine goes through every single page, but most of them will have at least on the first page. My website, gulfcoastfa.com, you can find it at the bottom. If you can't find the ADV on the website, first, close your browser and call us. But if you insist on moving forward with this financial advisor, then you can still find the ADV information by going to a site hosted by FINRA, who regulates us, called BrokerCheck. In general, if your advisor is commission-based for compensation, kind of what we were talking about a minute ago, you will find their ADV, their background information, their securities licenses here. If they're fee-based, BrokerCheck will automatically direct you. You click a button, it'll direct you to the SEC site, where it'll give you their side of the fee-for-service, the guys that have their 65 and 66. It also gives you a work history of your advisors. And to be fair, Michelle, I've been out of the broker world so long, but I think for some of the advisors that still have both all the type of licenses where they can do commissions and they can do fee-based, they're called duly registered. They probably have info on both sites, to be fair. All right. Now, this is going to blow, well, maybe you already know. Important note, listeners, this guy in Point Clear that allegedly committed this fraud, and he certainly held himself out as a hedge fund manager or a professional manager, was not securities licensed, because that's the first thing I checked when I saw the news.
So, okay. So, when you're an attorney and you got to file stuff, you have a number affiliated with you.
Correct.
And you guys do too, right? So
Yes.
how can he do transactions or whatever without...
This is exactly a great point. This is like somebody saying they're an attorney when they don't have their license. This is like somebody saying they're a dentist when they don't have their doctorate with dentistry.
But it's still difficult to do things. I mean, dentists, I guess, but if you're
with one exception that we're going to talk about.
Okay.
Yeah, one huge thing that they did. Listen, not having your securities license is a huge red flag for anyone that uses titles such as capital management or capital advisor or hedge fund or anything like that. That's the first thing. That's what you want to check. They have a securities license. All right, so let's say you check and your guy or gal has their securities license, right? Good.
Yay.
But that's just the first step.
Right.
Your second step, while you're on BrokerCheck or on the SEC site, is to look at what's called disclosures.
Sure.
In general, disclosures are client complaints. Not always. Sometimes there's, I know if like there's bankruptcies have to be disclosed, things like that. But usually it's client complaints. Now note this. This is really important, listeners. Just because an advisor has a disclosure doesn't make them a bad choice for an advisor. As you and Michelle and I have discussed on the show in the past, the bar to chin for a client to make a complaint about a financial advisor is actually very shockingly low. And unfortunately, there are companies in our industry, usually some of the bigger wirehouses and brokerage, that will try to stain the reputation of a departing advisor just for spite. They'll put some kind of bad...
Wow.
Right. So what you're looking for...
That's their non-compete.
It's a bunch of nonsense. But what you're looking for, listeners, is you're looking for a history, a trend of disclosures, especially anything around the handling of client money. That's going to be a big red flag. Okay?
Okay.
All right. To summarize, to make sure your advisor has the appropriate securities license and that they don't have a history of client complaints, particularly around the handling of client money. But guess what?
What?
Just as Michelle said earlier, that still doesn't mean they can't steal your money.
Yeah.
You know who was appropriately securities licensed? We've talked about him already.
Bernie.
Bernie Madoff. So that leads...
Weekend at Bernie's.
Right. A bad weekend.
Yeah.
That leads us to our final talking point for this segment, and it's a big one.
Is it?
It is.
Is it huge?
It's huge. In addition, listeners, to knowing where to find securities license information, there's going to be two terms that investors should know and understand. Those two terms are custody and discretion. Now, when I say custody, we're not talking about who gets the kids in a divorce. When I say discretion, we're not talking about not being the town gossip.
Dang.
We're talking about the primary reason you see horror stories about financial advisors and investment managers running off with clients' money. In fact, I'm be honest with you, when I see a news story about financial advisor fraud, after I check their securities license, I bet 90% of the time it comes down to one of these terms. So it's critically important that you understand what they both mean. Let's define both.
Custody and discretion.
Custody and discretion. Custody is who actually holds your assets, even if it's just electronic dollars.
Charles Schwab.
Right. So with few exceptions, a financial advisor should not custody your assets. That's what Bernie Madoff did. And allegedly, that's what this Point Clear guy did.
Did we not learn anything Point Clear?
And people want to get rich quick, and they have fear of missing out, right?
I know, but I want that money cash in hand.
I hear you. So they should be held, your money should be held by a third-party custodian. Michelle just mentioned one, the largest, at least in America and probably in the world, that's Charles Schwab. Another well-known custodian is Fidelity. There's the third biggest player is a company called Pershing. They're not as well known, but they're a huge custodian as well. But these are what are considered trusted third-party custodians. Okay, so that's custody. Who actually physically holds your electronic dollars? If simple terms, like if you all bank at Regions or PNC or anything like that, they're going to custody your dollars there, right? Okay. Second term is discretion. Discretion is when an advisor has the authority to make investment decisions on your behalf without seeking your approval for each trade. This is, as opposed to self-custody, this is actually very common and allows for efficient portfolio management, but it should always be coupled with the use of a third-party custodian. Okay? The biggest fraud risks arise when an advisor has both custody and discretion.
Yeah, you got to have those checks and balances.
Meaning that they directly hold and manage your money outside of a major regulated custodian. This is what has allowed so many Ponzi schemes to operate. This is how Bernie Madoff stole so many billions. This is allegedly how the Point Clear guy made off with allegedly tens of millions of dollars. So quickly, again, custodians, Charles Schwab, Fidelity, TD Ameritrade. There's other ones that are lesser known. You just want to make sure, like some of y'all that have a 401k, Empower is a large player.
I've got something with them, yeah.
John Hancock. Now, technically in the 401k space, even though they function in similar to custodians, they're called record keepers. But anyway, you want to have a name brand that you recognize, okay?
Okay.
So and then one more thing on this. Custody is really important. The extra independent layer of security. You don't want it's fine that your advisor has access to manage your funds, but should not have access to take them or transfer them to themselves or anywhere else. Also, Michelle mentioned this earlier with the DOS-based forms. Your statements should not only look professional,
right,
but they should come directly from the custodian.
Yeah.
Yeah. When my clients get a statement, they get it from Charles Schwab.
Okay.
Right. And they're very lengthy. I mean, there's a lot of stuff in there. Lastly, big red flag, never, and I mean never, ever, 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 ever write a check directly to your financial advisor or their company for investments. I had a client earlier this week that's new to this, and he was making an investment, and he said, okay, do I make it to Gulf Coast Financial Advisors? I said,
heck no.
Absolutely not. You make it to Charles Schwab, FBO, for benefit of, and then your name, and then we send that overnight secure tracking to Charles Schwab Processing Center in El Paso. They put it directly into your account. Off we go. You would think in today's world everything's done digitally, but unfortunately there's still a lot of checks. All right. So let's go through a little checklist, okay?
All right.
Here's the key takeaways for this. And again, listeners, there's nothing that ever fully guarantees all this, but if you'll do these things, you will dramatically decrease your chances of having what happened down in Point Clear, what happened with Bernie Madoff, and what happened on a couple of the headlines that Michelle and I are going to talk about in our next segment. Number one, always verify your advisor's credentials. Again, that's BrokerCheck, that's a FINRA site, and then the SEC, I think it's called IAPD as the site is called, but when you're on BrokerCheck, you'll see a button. If that advisor is a fee-for-service advisor, maybe he's originally started as a broker, it'll direct you to SEC sites. Insist on a reputable third-party custodian, which I'm going to tell you right now, if you have to insist on a custodian with a financial advisor,
walk away
and give me a call. Review your statements and make sure they come directly from the custodian. Understand all the fees and how your advisor is compensated. Again, because we're fee-for-service, what that means is the client pays us directly, or let me make that more clear. The client's investment account has the advisor fee deducted from it, and then it is paid to my company, which Charles Schwab eventually sends on through. So there's checks and balances on that. There's no other people involved in that mix, right? You want to know how your advisor is compensated. And then lastly, be wary, be terrified, but be wary of guaranteed high returns or pressure tactics. In fact, run away if a financial advisor promises you any type of
and call Josh.
High return. Yes. It is one thing to illustrate a hypothetical outcome on let's say on a fixed index annuity illustration. And even those sometimes are not that great. But there's another thing when you have these knuckleheads promise you 8, 9, 10, 12% guaranteed. More often than not, they're lying to you. Even the ones that are trying to be honest, it never works out, ever.
All right, good to know.
All right, listeners, if you're concerned about making the best decision when choosing a financial advisor, especially those of you that have heard the horror stories of fraud and you're nervous, we encourage you to reach out to us. You can call us at 251-327-2124 or find us on our website. That's Gulf Coast FA is in financialadvisor.com. When you're on our site, there's a blue button in the upper right-hand corner. You can click on it. That will put a meeting on my calendar. We got several choices. It can be as simple as a 15-minute introductory phone call. It can be a 30-minute Zoom, or my preference, we can do an in-person meeting at any of our 3 offices. We have one in downtown Fairhope. We have one in Orange Beach. It's just right down the road from the wharf. Or we have one in Mobile. It's near the intersection of Dolphin Street and I-65. However you reach out to us, please do. We'd love to meet with you. All right, folks, coming up next, there's always a lot going on in the world, particularly the world of finance, investments, and money. Every week we scour the internet for financial articles related to our topic of the day. Special articles are pertaining to those of you in or near retirement. Join us after the break to hear Michelle and I discuss this week's relevant headlines with our Michelle with the Headlines of the Week segment. Stay tuned.
A multidimensional financial services company, Providence Partners serves the needs of independent insurance, financial, and employee benefit professionals. The team at Providence Partners serves other business professionals like property and casualty agencies, registered investment advisors, community banks, and benefit brokers to assist in their clients' risk management planning. Whether an individual or business owner client, this planning includes income replacement protection, planning for extended healthcare costs, family needs, and generational transfers of wealth. At Providence Partners, we give you access to industry specialists. Those specialists focus on business succession, business owner planning, family and household protection, estate planning, planning for that income loss, or planning for long-term care solutions. Providence Partners is an Alabama-based company. We have offices in Birmingham and along the Gulf Coast. Our website is providencepartners.org, and you can reach us any of the working days.
Welcome back to Coasting Retirement. Your host, Josh Knoll here. So as we discussed before the break, every week we scour the internet, or what Michelle calls the interwebs, for financial articles related to our topic of the day. Special articles that pertain to those of you in or near retirement. Our job, or at least we tell ourselves it is to help you all understand how these headlines impact you, especially when it comes to your money. Now note, if you want to read our referenced articles for yourself, we include the links in our show transcript, which you can find on our website, gulfcoastfa.com. Go into the podcast tab, look for Coasting Retirement, and we put it up after this show airs on the radio. With all that said, and without further ado, here's Michelle with the headlines of the week.
Okay, Josh, keeping with our super fun theme of highway robbery, let's start with an article from one of our favorite sites, Investment News. They have a recent article titled, Ex-Pennsylvania IRA Hit with 8-Year Sentence Over $23 Million Client Fraud. The financial advisor, Scott Mason, received a sentence of 97 months in prison, followed by 3 years of supervised release, according to the Department of Justice. He was also ordered to pay nearly $25 million in restitution to defrauded clients and more than $2.3 million to the IRS. Ouch. Mason was charged with misleading clients in a decade-long scheme to fund his international travel expenses, country club fees, and other personal expenses, according to 3 government agencies. I picked this article because upon checking Mason's background, he seemed to check a few of the boxes we listed in the first segment. He was securities licensed, but didn't have a history of disclosures, and according to the news report, claimed to operate it as a fiduciary. However, and it's confusing, but it appears that Mason stopped using a third-party custodian back in 2007. So how did Mason get away with this for so long?
Well, so this is interesting. Now, there's some details in this case that they don't lay out.
It's a Commonwealth. It's weird.
Right. So, Commonwealth is actually a very well-known broker-dealer. Right?
Okay, I want to talk about the Commonwealth of Pennsylvania.
Oh, got it.
There's
Sorry.
only about 5 of them in the United States.
Yeah, folks, if you deal with an advisor that's with Commonwealth, was actually just got bought by LPL, but either one of those, even though they're not what you would say everyday national brand names, those would be trusted third-party custodians. Those are very well known, even though the Commonwealth name is going to be disappearing soon. Anyway, back to this guy. So it's interesting the timing of him leaving and basically going independent around then. And
around the 2007?
Yes, and him stop using a third-party custodian or a broker-dealer. Here's what I think. 2008, what happened to the stock market? Kersplat. This guy had he had a lot of experience. So he probably looked at this and said, and he probably was losing clients at that time period.
Sure.
I was not in the business then. I came into the industry in 2009 after a 10-year real estate career, and I came up on the insurance side, so I wasn't dealing with custody right off the bat. But I went through firsthand 2008 in real estate, and and all my money and all that junk. But my guess is that he figured out a way. He was tired of the market was tanking. He was losing clients. He thought, all these checks and balances, because I'm assuming because he got convicted, right? So let's, I'm not going to dance around this guy.
We put his name out there, Scott Mason. He in jail.
He in jail. My guest tells me that he leaned back on the trust he had developed with some of those clients over the years when he was with a bigger company, and used that trust to say, I'm going on my own, and I'm just going to do this all myself.
Or he might have kept on using their letterhead or something.
He might have. We don't know that, but I can if I were a betting man, Michelle, comes down to custody, like we talked about in the beginning. He probably, from 2008 on, maybe 2009, started self-custody. And anytime, it's so important, listeners, I know we talked about it in the opening, but if Michelle said he's securities licensed, great. He didn't have a history of disclosures, great. But you still have to trust, like what Ronald Reagan say? Trust but verify? Mm-hmm. Right. If he still has those in the mix but does not use a third-party custodian, that is a huge red flag.
Don't do it.
I even asked, a guy that I trust immensely in knowing our industry as well as anybody. I asked J.D. Gardner of Baptist Capital Advisors, is there any time when an independent advisor should self-custody? He said no. I thought, okay. So I'm not being overly dramatic about this. There really is no good justification for it. And to be honest with you, Michelle, I don't know why you would anyway. It is...
Well, if you wanted to steal from your clients, clearly.
Okay, but let's say you had good intentions. I mean, I can't even tell you how helpful it is to have Schwab's platform where we can create... for example, Schwab allows clients to, if they want to, they can securely connect their bank account to their Schwab account so they can transfer money in, transfer money out in non-qualified accounts called MoneyLink, right? That would be impossible on the independent side. They've got all this reporting. They break down all the positions. If you're self-custodying and you're even trying to do it the right way, which we don't hear a lot of those stories in the news, but if you're trying to do it the right way, you're talking about adding an unbelievable amount of work. And here's the funny thing. If you operate on the fee for... This is why it's so dumb. This is what drives me nuts. It's so much more work to do the shenanigans than to just do it right.
Yeah.
I mean, think about how...
That's why it takes a lot more energy to be a jerk. It's easier to be nice to people.
It's easier to be nice.
Yeah.
Now, of course, these guys probably had some kind of ill intent to begin with, right? But if somebody onboards with me, we're onboarding to Schwab. We're dealing with Schwab. We've got reporting systems. We got this. Schwab does not charge any transaction trading fees for stocks and ETFs, which is what we deal in. They don't have any annual fee. I mean, there's just no cost to it. It's such an efficient way for clients to work with us without running.
I have an annual fee with Charles Schwab.
Well, that may be a different account.
Okay.
But on the investment management side, now, of course, some of y'all listening, if you're on the mutual fund side, then what I'm saying is a little different. I don't deal with the mutual, especially don't deal with the commission side anymore. But Schwab just makes it almost seamless and such low cost that honestly, if you look at their profit and loss, their bottom line, how they make money is they make a little bit of money on their cash deposits, but they're not a high margin business because they were the first. I don't know if people realize this or not, but they were the first discount brokerage.
Okay.
So they kind of set the trend, and before them, it was expensive to have a third party custodian. After them, everybody had to follow their lead, and they're still the largest custodian because they're so efficient and so affordable.
So even if a financial advisor is honest, it wouldn't be reasonable for them
to dumb.
Do. Yeah.
It's dumb.
Okay.
Yeah. It'd be so much extra work.
Right.
Even if they were the most honest person on earth.
Yeah. And if it doesn't cost much to do it,
and I could tell you, I would hazard a guess, I haven't ever checked this because it's not anything I've ever worried about, but I would think in Alabama, the Alabama State Securities Commission probably doesn't even allow it. I doubt it. And the SEC probably frowns upon it anyway. So
I'm sure.
You're just adding a whole lot of headache for something. Again, more likely than not, they're at least with some kind of glimmer in their eye of they realize how they could actually get their hands on some money. All right, very good. What's next?
All right, let's stick with investment news in mainline Florida. They have another recent article titled SEC Seeking Sanctions for a Former Florida Investment Advisor for an Alleged $17 million Fraud. Advisor Andrew H. Jacobus?
Something like that.
Alleged scheme included misappropriating client assets, providing falsified statements, and running a Ponzi-like structure. According to the SEC, 62-year-old Jacobus raised approximately $39.7 million from 40 clients between May 2015 and April 2024, a long time, under the guise of investing in IPOs and private investment funds. He was also charged with targeting vulnerable targets, including the elderly and religious institutions. That ain't good. It's bad juju. And allegedly used fake investment promises to lure unsuspecting victims into his scheme. We've already discussed how guys like this get away with theft for so long until they don't. But I would like for you to discuss why Jacobus targeted clients is so egregious.
Well, you mentioned one piece of it. So there's two things. One, targeting the elderly is...
Talk to Jen Shaw about that from Real Housewives of Salt Lake City. She's in the Slammer. Mm-hmm.
Still? She's not one of the ones that got released, was she?
She got 2 years off of 7, so I think she's still serving. Got 2 more or something.
Well, because listen, elderly has taken on different connotations over the years. Most people listening to this show probably don't consider themselves elderly, and I respect that and I appreciate that. Well, I'm middle-aged. I don't consider myself elderly, and I feel like I'm just as sharp. It's funny, on basketball, my skills are completely eroded. But as far as business-wise, I've never been more efficient and sharper.
Okay. And
when it comes to this stuff, people, a lot of times, technology is changing so fast that if somebody comes in, and we see this, it's our next article we talk about it, crypto is as bad about this as anything, of throwing all these terms at people that they don't fully understand. And you and I have talked about not only fear of missing out, but a term I coined called fear of looking old, FOLO, where they think, okay, well, this guy or gal's just really smart. I need to trust them. Off we go. I'm just, maybe I'm a little older. I'm not hip anymore. Like like Homer Simpson's dad says, I used to know what it is, but it got weird and scary. So that happens. What really pisses me off here is the religious institutions. Because if you dive deeper in this article, he was pitching directly to the congregation. Folks.
Directly to Venezuelan
Yes, even hyper-specific.
Catholics.
Yeah, so there was probably a language barrier of some kind, maybe. Or maybe he was Venezuelan.
I think
don't
he's
know.
Venezuelan.
But the point being is, folks, I cannot stress this enough. I mean, I cannot stress this enough because I've seen it all the time. I've seen it in my own career. If someone is pitching you investment in church, don't do it.
Yeah.
Don't do it. I know that's going. I'm right now, Michelle. You got to have my back here because I'm stepping in it right now. I'm guarantee you, there's somebody that's getting a little red in the face, aggravated at me right now because there. I don't want to name names, but there are certain church organizations that have a proven track record of doing business. Right?
Yes.
Okay. So I want to steer clear on which ones those are, but there's proven track record. What I'm talking about is when especially if somebody comes in and holds himself as a financial advisor or investment manager, and they come in and they're pitching the church as a group with this great investment idea. It's one thing to let the church know that, hey, I'm a financial advisor. I've got an office, downtown, wherever. Would love to work with you all. Here's my card. Blah, 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 blah. That's one thing. It's another thing when they come in and they've got a PowerPoint and they're showing all these fantastic returns and they're preying on, it's called affiliated trust. They're preying, especially if they get somebody that's of authority in the church to vouch for them, they prey on that authority where people think they can trust them. Don't. Folks, do not. If you ever get pitched an investment in church, do yourself a favor, call somebody like me or any other, independent advisor.
Don't even pray about it. Just walk away.
Just walk away. Call us and run it by us, and I can promise you, and we've done this before, we can show you where the holes are in the story. Super, super important, and that's why this is so aggravating. Not only did this guy do elderly, he also did he used religion as a way to scheme. How much? Almost 40 million?
Yeah, 39.7.
Ah, that's gross. Mm-hmm. So gross. All right, what's next? I need a shower.
Yeah. All right. Yeah. We went a little long so far, so we just have time for one more news headline. And since you're so riled up with all of these stories of both convicted and alleged wannabe robber barons in your industry, I thought it would give you the cherry on top. CNBC Business has a fresh-off-the-press article titled Time for 10% to 40% of Portfolio in Crypto, says financial advisor Rick Edelman. When I started reading this article, I thought, who cares what this one financial advisor say about crypto? But this Edelman guy, Kai, is kind of a big deal when it comes to that and in your business. Is that right?
That is correct. So
okay.
he is he's the founder of Edelman Financial Engines.
Oh, engines.
That is a independent RIA, registered investment advisor, which I am as well.
Okay.
The difference between me and Edelman is they've been around for many years.
Is billions of dollars
they
in
manage,
AUM?
Hey, I manage a lot of money, but they manage nearly $300 billion in assets under management. So they are now he's retired, but they're a well-known independent. In fact, they're I believe they're called an aggregator. So, folks, this is important. I'm sorry to interrupt you, Michelle. But on the RIA space, there's several different flavors. So I'm an independent RIA. There are what are called roll-up RIAs.
Fruit roll-ups.
Yeah, where they buy practices, and usually I think it's on. I may be getting this backwards. Forgive me, but there's roll-up and there's aggregators. I believe it's a roll-up RIA that basically buys other practices. They come together so that the value of the enterprise is more than they would be in individual pieces, and they typically do that to facilitate a sale. A lot of times it's using. There's nothing wrong with what I'm saying.
Okay.
Forgive me if I wasn't clear on that. And then aggregators buy practices and they rebrand them under the corporate umbrella. The two biggest ones that I know of are Creative Planning and Edelman. So, so this guy's got a voice.
All right.
He'd be right there with Ken Fisher. I mean, he's a big player.
Okay. All right. Okay. So, since we've talked all about fraud, I thought we would discuss an investment that has never shown any signs of fraud or investor abuse with crypto.
What?
Kidding. Lots of missing money in crypto. So, isn't crypto infamous for investors losing billions to outright theft? Because it doesn't exist.
Well, hold on. We're gonna be fair. So we're gonna be fair to start. I saw this article and I decided, well, I'm going to see if there's any more news about it. There are related articles about what he said because he said it for the shock value, this Edelman guy, right?
Because at first he said, 1% once upon a time is what he
Years
suggested?
Ago, he said 1%. And I told you, I've sat in conferences where somebody told me 10%. I'm going to circle back to that. But in one of the related articles, he specifically mentions Bitcoin and Ethereum, two of the more established cryptocurrencies for whatever that is worth.
Okay.
So let's make sure listeners, you understand this. And again, I'm not a crypto expert, but I know enough to at least explain this.
And be dangerous.
There's the original coin called Bitcoin. Then there's ones that are kind of are near the beginning. Ethereum's one of them. Then there are what's called meme coins, which Doge was a meme coin, which is basically worthless. There's NFTs, non-fungible tokens, which are basically digital pictures. I think Michelle's the one that pointed out screenshots, kind of shot that one all to heck pretty quick. There's stable coins, which are supposed to be pegged to the U.S. dollar. There's a lot more conversation to have around this. Here's my heartburn with Edelman coming out and saying this. The casual investor will hear a guy with this much investing credibility, and they will assume that he means all of crypto, including the total crap show that is NFTs and meme coins, right? Crypto in general. What we're going to do, Michelle, we're going to take Bitcoin, we're going to put it to the side. Because at the very least, as much heartburn as anyone may have with actual Bitcoin, it actually has a track record of several years now, right?
Yeah.
We're trying to be fair here. It's at least got a track record of going up and down, but it's at least had some value as long as there's someone on the other end to buy it. But on the meme coins and NFTs and all that, crypto is the greater fool theory of investing. And what that means is you got to find a fool greater than you to pay more than you pay for it. And as long as it keeps generating new fools for its wood chipper, this nonsense will continue. I will remind listeners that we are about 18 years into this crypto thing, and I will ask them, when is the last time that they used crypto or blockchain for anything in their daily lives? I'm waiting. The problem with guys like Edelman, and you know that I know some of them, right, Michelle?
Yes.
I know some of these guys.
Yeah.
Yes.
They have hats.
They get so far removed from the viewpoints and the goals and dreams of regular investors that they lose touch with that reality. Edelman has made a lot of money, and good for him. I mean, my guess is he probably didn't start out wealthy. Most of the guys don't, right? Go ahead. You were going to say something?
Oh, no, but he was that before crypto came to be.
Yes.
He was wealthy and successful. So.
Well, to some degree. But the point being is they get to a point where they start believing their own BS.
Yeah.
And they like having this attention, and they like making crazy predictions.
Oh.
Wait, that kind of sounds like me.
Yeah, wait a minute.
I like attention.
Wait a minute.
No, I disclosed to John Luke Tyner last week that I'm not shy, but I'm self-conscious. That's another story for another day. Anyway, the point being is 10 to 40% of your portfolio in crypto, it's not time yet. I could be wrong. And again, I want to make sure I'm very clear in this. We're taking Bitcoin and we're putting it to the side, but I'm talking about meme coins, NFTs, all this other stuff that is, at the end of the day, is just a junk. It's just, what do you call that when you run around chairs and you sit down and the music stops? What's that called? Help me out here. The music stops, you got to find a chair.
A ring around the rosy, pocket full of posies.
We're showing our age now.
Yeah.
Anyway, 10 to 40%, no. Putting
musical chairs.
Thank you, musical chairs. Yeah, meme coins, NFTs, all this musical chairs. We'll see how it plays out, but no, not yet. And I'm disappointed that Edelman said that because it's misleading.
I'm sure he's going to be torn up about that.
I'm sure he is. I'm sure he's listening. Well, listeners, if you would like to have a no BS conversation about your money with someone that hasn't lost touch with reality, then give us a call. 251, only occasionally, 251-327-2124, or find us on our website, gulfcoastfa.com. On our site, click on the blue button, upper right-hand corner. That'll put a meeting on my calendar. That could be simple as a 15-minute introductory phone call. Could be a Zoom, 30-minute Zoom, or my preference, a 1 hour in person, totally complimentary, any of our 3 offices, downtown Fairhope, Orange Beach, or Mobile, again, near the intersection of Dolphin Street and I-65. However you reach out to us, make sure you do it. We'd love to meet you. All right, coming up next, folks, Joshua's Crystal Ball and Big Mouth would have been some of my predictions. Have I been right? Was I ever wrong? How wrong? What do I think is going to affect investors in the near future or maybe the distant future? We talk about all these things and poke a little fun at my big mouth. Stay tuned. Whether it's building a business from scratch with your own 2 hands and wanting to maximize the financial impact of those sacrifices, or growing a great nest egg by being a dedicated and reliable worker for years, or choosing to live a life well within your means in order to accomplish a lifelong dream of retirement, the last thing you want is to go with the wrong financial advice after you've worked so hard to accumulate your assets. You've also probably spent most of your life putting others' needs ahead of your own, and now it's your turn. We can help. Gulf Coast Financial Advisors is a locally owned, independent, fee-based financial planning, investment management, and tax planning practice. We have offices in Fairhope and Orange Beach. We serve all of Baldwin County and the Gulf Coast. We also have an easy-to-understand fee-for-service model with no sales quotas, no proprietary products. Our ultimate responsibility is to our clients' goals and dreams. You can reach us at 251-327-2124 or find us online at gulfcoastfa.com. That's GULF, like the Gulf of Mexico, Coast, FA as in financialadvisor.com. Welcome back. Your host, Josh Knoll here, alongside co-host Michelle Lee Melton. So, Michelle, I'm opinionated. I have strong opinions at times. I'd say a radio show host it isn't probably wouldn't be very interesting to listen to. And to be fair, I'm paid in my profession to offer professional guidance and opinions to my clients. Otherwise, it's replaced me with AI. So I like to make predictions, and sometimes I swing and miss. So let's get at it with Joshua's Crystal Ball and Big Mouth.
Okay, let's get after it. Okay, I don't know if you've heard, but I've been a little busy this week.
Yes, I've heard.
You have heard and experienced that. I'm moving.
Yes.
So instead of a long setup, I'm just going to ask you for a few rapid fire predictions. Are you ready?
I am.
Okay. The Nappy Award winners will be announced in a couple of weeks. Will this radio show win the award for Best Lifestyle Radio Show? We better.
I don't think so. And here's why.
Because we don't know yet?
Well, this is a prediction, right? I think we got 2 things going against us. One,
Kelly Finley's leaving.
Okay, 3 things. Number 2 is we are the baby of the bunch in that list. I mean, those shows have been around for. I mean, we are going on our 3rd year, which is
bright
impressive.
and shiny, though.
That's fair, right? So they are more established.
Right.
But thank you, listeners, for even getting us nominated. Because if we're being honest with you all, Michelle and I totally forgot to nominate ourselves this year.
We didn't.
So somebody else did. So thank you.
Yeah.
I'm hopeful. But also, I think that I'm not accusing this of our competitors, but I do think there's a certain bot element to some of the emails.
Okay.
Because it's you vote by an email per day.
Yes.
So if you could flood the zone, and you're not, and it just is what it is. It's not a judgment.
I couldn't flood the zone because I can't do my Gmail at work.
Yeah, I think I got 3 emails. I did all 3. I'm going to be honest with you.
Oh my gosh, I did it daily, Josh. Shame on you.
I voted early.
You did it daily for 28 days.
So no, I don't think we will, but wouldn't it be cool if we did?
It would be cool, but we might.
All right.
My prediction is that Kelly wins because she's going back to Michigan or somewhere.
Yeah, and she'd be a great winner if she did.
And she's amazing.
That's
Kelly
right.
Finley, tell me
Yes.
something good. Okay.
That's right.
So on a previous episode a few months ago, you predicted the S&P 500 would end that year at 6,200. The S&P went above 6,200 this week, and there are still 5 months to go. Would you like to revise your prediction?
Yeah, it looks like I was kind of not as optimistic as usual. So
Glass half full.
You're right. J.D. Gardner said 6,800. John Luke Tyner said 6,500. Those are two guys that I trust. Now, again, this is just for fun, listeners, because we don't know. I mean, we're just doing this. Don't take this as just because we say the S&P is going to be up a certain percentage that we're guaranteeing that if you invest in an S&P 500 fund that it's going to go up. Not saying that at all. Some of this is just for fun. But you're right. The S&P 500 went above 6,200 this week. That was my guess for the end of the year. So if things continue in a positive line, then I'm going to be wrong. However, I think the one thing that I can predict without a whole lot of uneasiness is we're going to have a lot of volatility to get there. We're going to have a lot of roller coasters.
One of my favorite words.
It's going to be a wild ride.
Volatility. Mr. Toad's wild ride.
That's right.
Okay.
Right.
Lastly, and I'm excited about this, people, listeners. Okay, so Amtrak announced yesterday.
This week. Amtrak announced this week.
This week that they are reigniting the service between Mobile and New Orleans. Club car, here I come. So, do you think that's going to be a hit, or do you think it's going to be a giant waste of time and money?
Well, I know it's got a lot.
It's going to be a hit for us. We're going.
I know there's a lot of naysayers, but I'm going to go on the record. I think it's a fantastic idea.
Yes.
Now, of course, you and I both love New Orleans,
yes.
so we're a little biased. I think it's going to be a fantastic hit, and I can't wait to ride the track.
Heck yeah.
Yeah, so I think it's going to work out. I'm sure it's going to have its problems, but I think all in all, it's a great thing to have.
Nothing that can't be fixed on the club car.
Very good. Well, listeners, I hope you enjoyed a little peek behind how I form my opinions and make predictions. We invite you one last time, if you'd like to have a conversation with us about your investing goals, your retirement dreams, give us a call, 251-327-2124. Or go to our website, gulfcoastfa.com. While you're there, be sure to click on that blue button, put something on my calendar. If you want to meet in person, you can find us at our downtown Fairhope office or Orange Beach or Mobile off Dolphin Street and I-65. However you reach out to us, make sure you do it. We'd love to meet with you. Michelle, that's it.
All right.
All right. I want to give a huge thank you for my returning and lovely co-host, Michelle Lee Melton.
You're welcome. Thank you. Thank you, listeners.
Yes. Thank you to our show sponsor, that's Providence Partners and Mr. J. Stubbs. Thank you to our two awesome radio stations, that's FM Talk 106.5 out of Mobile and WHEP 92.5 FM out of Foley. Many thanks to the provider of our show music, that is Local Band and Michelle's favorite animal, Sloth Racer. Huge thank you to the show producer, that's my son Peyton Null. And as always, my sincere appreciation for all of you out there that have been listening and joining us on this journey. We'd love to be a part of your journey as well. So until we talk again, have a wonderful and productive week. This has been Coasting in Retirement with Josh Null. Gulf Coast Financial Advisors, LLC, known as GCFA, is a registered investment advisor offering advisory services in the state of Alabama and in such other jurisdictions where it is registered, filed the required notices, or is otherwise excluded or exempted from such registration and or notice filing requirements. Registration does not indicate or imply that GCFA has attained a particular level of skill or ability, nor does it constitute an endorsement of the firm by the Securities and Exchange Commission, the SEC, or any other state securities regulator. The Coasting in Retirement radio program serves mainly to disseminate general information, including those pertaining to GCFA's advisory services, together with access to additional investment-related information, publications, materials, and links. The publication of this radio show should not be construed by any client and or prospective client as GCFA's solicitation to effect or attempt to effect transactions in securities, nor should be interpreted as GCFA providing personalized investment advice or any type of professional advice for compensation wherever this program is broadcast. Any subsequent direct communication by GCFA with a prospective client will be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. Certain information, news stories, headlines, data, charts, graphs, figures, or statistics presented on this radio program may have been obtained from third-party sources that are believed to be generally reliable, but which GCFA may not have independently verified. GCFA does not and cannot guarantee the timeliness accuracy, or reliability of any such third-party information and undertakes no obligation to update or correct any information that may become obsolete, unreliable, or inaccurate. This radio program also contains the opinions, views, and perspectives expressed by Josh Knoll and any other GCFA representative, which are solely their own and do not necessarily reflect the opinions, views, or perspectives of GCFA as a firm. Such personal views and opinions should not be construed as endorsements or professional advice from GCFA. GCFA makes no representation or warranty regarding the accuracy, completeness, or reliability of any information on this radio program and disclaims any liability for any direct or indirect loss or damage incurred from using or relying on such information. GCFA and Providence Partners are not affiliated, nor are any of their respective representatives.